Bitcoin ETFs, a new era of crypto investing or a trap. Did you know that the Bitcoin ETF, a seemingly promising financial product, might harbor risks that could impact your investments? Stay tuned as we uncover the hidden dangers lurking behind the Bitcoin ETF approval. Welcome back to Dividend Dollars, everyone. It's the end of 2023, and the buzz around Bitcoin ETFs is louder than ever. But is everything as rosy as it seems? Before we start, don't forget to hit the subscribe button for more insightful updates. Let's get started. Bitcoin price and ETF speculations. Alright, so let's explore the intricate relationship between Bitcoin's price fluctuations and the swirling rumors about the approval of Bitcoin exchange-traded funds. As we stand in 2023, the crypto landscape has evolved dramatically, and with it, the implications of introducing a Bitcoin ETF have become a topic of heated debate and intense speculation. First, let's talk about Bitcoin's price trajectory. This year, we've witnessed Bitcoin's price showing signs of recovery from its previous tumultuous journey. Remember the highs of late 2021 when Bitcoin nearly touched the $68,000 mark? That seems like a distant memory now, but the roller coaster hasn't stopped. After a significant drop, partly due to macroeconomic factors like inflation concerns and interest rate hikes, Bitcoin has shown resilience, bouncing back, albeit with caution. The recent surge in Bitcoin's price, soaring above $40,000 and reaching its highest level in 18 months, has sparked a wave of excitement and speculation in the cryptocurrency market. As of the latest update, Bitcoin was trading at around $41,600, and now around $44,000 as of December 2023, marking a significant rebound from its previous lows. This rally is not just a reflection of the cryptocurrency's resilience, but also a response to broader economic and regulatory developments that are shaping the landscape of digital assets. Now, let's hear about the Bitcoin ETF rumors. The idea of a Bitcoin ETF has been floating around for several years, with various financial institutions attempting to launch one. The primary allure of a Bitcoin ETF lies in its potential to bridge the gap between traditional financial markets and the world of cryptocurrencies. Such a fund would allow investors to gain exposure to Bitcoin without the complexities of managing cryptocurrency wallets and navigating digital asset exchanges. In 2023, these rumors have gained more traction than ever before. Several financial giants and crypto-focused companies have either filed for ETFs or expressed interest in doing so. The market has reacted to each of these developments with a mix of optimism and skepticism, reflecting the diverse opinions on the feasibility and impact of such a financial product. A significant factor fueling these rumors is the regulatory environment. The U.S. Securities and Exchange Commission, SEC, among other regulatory bodies, has been hesitant to approve a Bitcoin ETF, citing concerns over market manipulation, investor protection, and the nascent nature of the cryptocurrency market. Each announcement, delay, or comment from regulatory authorities has the potential to stir the market, as seen in various instances throughout 2023. But here's where it gets tricky. The excitement around the Bitcoin ETF also brings with it a wave of speculation. Market participants might be overestimating the immediate impact of an ETF on Bitcoin's price. While it's true that an ETF could attract new investors, especially from the institutional side, the actual effect on Bitcoin's price in the short term is hard to predict. It's essential to consider the market's maturity, the evolving regulatory landscape, and the broader economic environment. Bitcoin ETF could lead to a shift in how Bitcoin is perceived and used. Currently, Bitcoin is often seen as a digital store of value, a digital gold, if you will. But with an ETF, it might start to be treated more like a traditional financial asset. This shift could have far-reaching implications for Bitcoin's role in the financial system and its appeal to different types of investors. So while the rumors of a Bitcoin ETF approval are undoubtedly exciting, they also bring a level of complexity and uncertainty to Bitcoin's price dynamics. We really got to look beyond the hype and understand the underlying factors at play. Will the approval of a Bitcoin ETF be the catalyst for a new era in Bitcoin's history? Or will it be another chapter in its ongoing saga of volatility and speculation? Only time will tell, but one thing is for sure: the crypto world will be watching closely. Bitcoin price analysis factors. Now I want to show you the breakdown of the factors influencing Bitcoin's price and what investors should watch out for. Number 1. Market dynamics and historical trends. Bitcoin's journey has been nothing short of a roller coaster. From its inception, Bitcoin has experienced dramatic rises and falls. In 2021, we saw Bitcoin reach its all-time high, right? And this is driven by a combination of institutional interest, retail FOMO or fear of missing out, and broader acceptance as a payment method. But this was followed by significant corrections, influenced by factors like regulatory news, tech industry trends, and global economic shifts. Now let's look at 2023. Bitcoin's price dynamics continue to be influenced by a complex interplay of market sentiment, regulatory developments, and technological advancements. The anticipation of Bitcoin ETFs has added another layer to this dynamic, creating both opportunities and risks for investors. Number 2. Technical analysis and predictive models. Technical analysis remains a key tool for many investors. By examining patterns in Bitcoin's price charts, traders attempt to predict future movements. Popular indicators like moving averages, relative strength index or RSI, and Bollinger Bands are used to gauge market sentiment and potential price direction. However, it's important to remember that technical analysis is not foolproof, especially in a market as volatile as Bitcoin. Predictive models like stock-to-flow have also gained attention. These models attempt to predict Bitcoin's price based on its scarcity, the ratio of existing stock to the flow of new coins. While these models provide an interesting perspective, they should be considered alongside other factors, as Bitcoin's market is influenced by a myriad of external variables. Number 3. Impact of external factors. Global economic conditions, such as inflation rates, monetary policies of central banks, and geopolitical events, play a significant role in Bitcoin's price. For instance, Bitcoin has sometimes reacted to changes in U.S. Federal Reserve policies or significant global events like the COVID-19 pandemic. Regulatory news has a particularly pronounced effect. Announcements regarding the regulation of cryptocurrencies or the potential approval of Bitcoin ETFs can lead to immediate and significant price movements. For example, positive news about ETF approvals could lead to a surge in price, while regulatory crackdowns in key markets like China or the U.S. have historically led to price drops. Number 4. Investor behavior and market sentiment. The behavior of different types of investors from retail to institutional significantly impacts Bitcoin's price. Institutional investors bring in large volumes, but their investment strategies can differ vastly from those of retail investors. The entry of major financial players into the Bitcoin market, partly driven by the potential of Bitcoin ETFs, could lead to more stability in the long run but also introduce new dynamics in the short term. Market sentiment, often driven by news and social media, can lead to rapid shifts in investor behavior. The hype surrounding new developments like ETFs can lead to speculative bubbles, while negative news can lead to panic selling. Bitcoin's global liquidity. If you don't know this yet, I'd like to show you this concept and its implications. Liquidity, or the ease with which an asset can be bought or sold without affecting its price, is a crucial aspect of any financial market. For Bitcoin, understanding these dynamics is essential, especially when considering the potential impact of Bitcoin ETFs. Bitcoin's liquidity varies significantly across different exchanges and geographical regions. This variation is influenced by factors such as local regulations, the presence of institutional investors, and the level of cryptocurrency adoption in those areas. In some markets, Bitcoin trades with high liquidity, meaning large transactions can occur without significant price impact. In others, liquidity can be relatively low, making large trades more likely to move the market. So what's the impact of ETFs on liquidity? The introduction of Bitcoin ETFs could significantly alter the liquidity landscape. By providing a regulated and potentially more accessible way for investors to gain exposure to Bitcoin, ETFs could bring more participants into the market. This influx of new investors, especially institutional ones, could increase the overall liquidity of Bitcoin, potentially leading to more stable prices. But of course, there's also a concern that ETFs could lead to a concentration of trading activity within certain regulated environments, potentially reducing liquidity in the underlying Bitcoin market. This could happen if investors choose to trade ETFs instead of actual Bitcoin, leading to a disconnect between the ETF market and the actual Bitcoin market. Now let's talk about the global regulatory environment, as this plays a significant role in Bitcoin's liquidity. In regions with favorable regulations, such as some European countries, Bitcoin trading tends to be more liquid. But in regions with restrictive policies, such as China's ban on cryptocurrency exchanges, liquidity is significantly hampered. In 2023, the regulatory landscape continues to evolve, with more countries developing frameworks to regulate cryptocurrencies. The way these regulations are structured will have a significant impact on Bitcoin's global liquidity. Clear and supportive regulations can enhance liquidity by attracting more participants, while restrictive policies can have the opposite effect. Aside from that, institutional investors bring significant capital and can greatly influence liquidity. As more institutions enter the Bitcoin market, partly driven by products like ETFs, they can enhance liquidity by providing more depth to the market. However, their trading strategies can also lead to large market movements, especially during periods of high volatility. Here's something interesting. One of the core principles of Bitcoin is decentralization. But the introduction of ETFs and the increasing participation of institutional investors could lead to a form of centralization, with a significant portion of trading activity and price discovery happening in regulated centralized environments. This shift could have implications for the ethos of Bitcoin and its market dynamics. Bitcoin's global liquidity is a dynamic and multifaceted aspect of the cryptocurrency market. The potential introduction of Bitcoin ETFs in 2023 adds another layer of complexity to this picture. While ETFs could increase liquidity and make Bitcoin more accessible to a broader range of investors, they also bring challenges related to market centralization and regulatory impacts. Bitcoin ETF potential approval. Now let's focus on the potential approval of Bitcoin ETFs and the possibility of a market pullback that could follow. The significance of Bitcoin ETF approval. The approval of a Bitcoin ETF would mark a watershed moment in the history of Bitcoin. It represents a significant step towards the legitimization and mainstream acceptance of Bitcoin as a financial asset. For retail and institutional investors alike, it offers a regulated, accessible, and potentially less risky means of investing in Bitcoin. This could lead to an influx of new capital into the Bitcoin market, as investors who were previously hesitant due to the complexities and risks associated with traditional cryptocurrency investments might now feel more comfortable. Market reaction to approval. Historically, markets tend to react positively to news of approval for financial products like ETFs, as they are seen as a sign of maturity and stability. In the case of Bitcoin, the approval of an ETF could lead to a surge in its price, driven by increased demand and heightened investor confidence. However, this initial euphoria might not be sustainable in the long term. Now a pullback, or a significant drop in price following a rapid increase, is a common phenomenon in financial markets, and Bitcoin could be susceptible to this post-ETF approval. There are several reasons why a pullback might occur. Number 1. Profit-taking. After a significant price surge, early investors or those who bought in anticipation of the ETF approval might decide to cash out their profits, leading to a selling pressure in the market. Number 2. Market overreaction. Markets sometimes overreact to news events. The initial surge in Bitcoin's price following ETF approval might be driven more by hype and speculation rather than fundamental value, leading to a correction. Number 3. Regulatory and operational challenges. The actual rollout of Bitcoin ETFs might face unforeseen challenges, from operational issues to regulatory hurdles. Any negative news or setbacks in this process could dampen investor sentiment. Number 4. Rebalancing of portfolios. Institutional investors, in particular, might rebalance their portfolios post-ETF approval, leading to a shift in the market dynamics. While a pullback can be concerning in the short term, it's important to consider the long-term implications of a Bitcoin ETF. The introduction of such a financial product could lead to greater stability in the Bitcoin market over time, as it attracts more diversified and sustained investment. It could also pave the way for more innovative financial products based on Bitcoin and other cryptocurrencies. While Bitcoin ETFs offer exciting opportunities, they come with hidden risks that cannot be ignored. As investors, staying informed and cautious is key. Do you think the approval of Bitcoin ETFs will benefit the market in the long run? Share your thoughts in the comments below. And if you like this video, don't forget to hit the like button and subscribe for more updates.